Hello guys, and welcome to another financial markets weekly update video. My name is Styliana and I'm the head of investments and market research at Pure Fintech, and in today's video we're going to see how the commodities, stocks and crypto markets reacted to the news and what to expect in the current week from the markets. In the previous week, we had the Consumer Price Index or CPI change. Dollars purchasing power plunged in February as inflation spreads across services. The inflation data doesn't yet include the bulk of the crazy price spikes we've seen in commodities over the past few weeks, including wheat and fuel, and it doesn't yet include the bulk of raging housing inflation. The broadest consumer price index jumped by 0.8% in February from January and by 7.9% from a year ago, which is the worst since December 1981, according to data released by the Bureau of Labor Statistics. Now let's have a look at what happened in the crypto markets in the previous week. The most important event of the previous week in the crypto market, guys, was Biden's executive order. At first, there were concerns that the administration was going to use the recent sanctions as an excuse to crack down on crypto because of sanctions evasion. Indeed, if you had been following the rantings of some anti-crypto politicians of late, it seemed inevitable. However, there were no new regulations. It was merely an order that directed agencies to study the impact of cryptocurrency on financial stability and national security. This was a good result for the crypto industry, not only because it didn't have destructive regulations in it, but also because we can see that the administration appreciates the innovation in the space. Also, stocks of companies operating in the cryptocurrency and digital assets space have witnessed a price jump following a positive reaction to President Biden's new executive order. The likes of Coinbase and MicroStrategy experienced a surge of 10.5% and 6.4% at the market close, respectively. Now, regarding the conflict between Russia and Ukraine, it is no secret that digital assets and cryptocurrency have played a part on the ongoing conflict instigated by Russia and Ukraine. On the one hand, there remains the fact that the wealthy Russian individuals and institutions could use cryptocurrency to circumvent the impact of sanctions. On the other, crypto has allowed Ukraine to raise staggering volumes of funding support via donations dominated in digital assets. Now let's have a look on the most important events of the current week. This week we have the FOMC statement and federal funds rate. Expectations are the FOMC will announce a 25 basis points rate hike at the meeting this week. In addition, the FOMC will hint at balance sheet reduction and indicate further rate hikes at upcoming meetings. The invasion of Ukraine will probably keep a 50 basis point rate hike off the table for now, as the war is leading to a surge in prices, but the Fed cannot stop the war or end the pandemic with monetary policy. This week, we're also expecting the Producer Price Index, which is forecasted at 1%, the core retail sales with an estimation of 0.9%. We should also note that the previous month's core retail sales were 3.3%, a higher percentage of the forecast, which was at 1%. That's all the news for the current week, guys. That's also what happened in the previous week in the markets. If you have any questions or if you want to open a trading account with us, you can contact us through our website or our social media. We'll be more than happy to help you. Thank you for watching and wishing you a wonderful week.